Bookkeeping versus accounting. This is the most common search topic and the most basic topic if you are planning for a job interview or an exam. So, this is a live example. Sarah runs a small coffee cart called Brew and Co in her city. So obviously she has to hire some helper and she has a material in making a coffee. So the difference between one is bookkeeping. So she hires a bookkeeper named Nadia. Every day she records how many cups of coffee, how much money was made, what was spent on milk, cups and beans, and wages paid to the helper. So in one line, bookkeeping is about recording every transaction like writing in a daily diary. So you can replicate or you can understand it's like how you write your diary and how do you write the important events in a diary. It's like a bookkeeping. So then enter accounting. So at the end of the month, she wants to know, did she make a profit or not? Where is most of her money going? Like what is the cash flow of her money? Should she raise her prices or cut cost? So she takes all of Nadia's records to Ali to the accountant. So here is the role of accountants enter. So what does he do? He organizes the records into reports, prepares a profit and loss statement, analyzes where Sarah is making and losing money, and advises her if she should reduce expenses. So accounting is like a turns raw data into strategic form. So the key difference between them, bookkeeping is like records daily transactions, maintain ledger, no decision making involved, data entry and accuracy, but the accounting is like you have to analyze the records, prepare reports, provide financial advice, and interrupt the strategy. So the basic difference between them, bookkeeping is like a daily log, and the accounting is a the financial story and a plan of your business. So both are very important in doing a business, but this is a very difference. So now I will conclude by saying, isn't the bookkeeping the same as accounting? So his answer is no. So next time when someone asks you, you know the difference between them. Both bookkeeping is like the keeping a record of everything and the accounting turns into decisions. So both are essential in running a business. Bookkeeping and accounting. So this is a very basic information for your accounting and financial studies. So what is a bookkeeping? So, bookkeeping is a process through which financial transactions are identified, measured, recorded, and classified. So, it is a first step and considered as a base for accounting. It cannot be based on bookkeeping only. So, bookkeeping helps to keep a systematic record of financial transactions. And the financial statements are prepared after bookkeeping process. But as comparison to accounting, the definition of accounting can be defined as accounting is a system of recording, classifying, summarizing, and interpreting financial information. So this information is recorded and classified through the bookkeeping process. Accounting begins where bookkeeping ends. So this suggests that accounting is a broader term as compared to bookkeeping, and it can be based on accounting. So accounting has the objective to ascertain the financial position, and the financial statements of any entity are prepared on the basis of financial records obtained through bookkeeping. So this is a basic definition and difference between bookkeeping and accounting. Now, the difference between bookkeeping and accounting, or you can also say the comparison between both of them, can be the bookkeeping and accounting are both important parts of managing your finances and your businesses. As we all know, the finance is a vital part of any business. So, if you are able to manage finance, then you will be able to succeed in your business. So, at first glance, the two can seem quite similar, but there are a few main differences. Like bookkeeping focuses on recording and organizing financial data, but accounting is the interpretation and the presentation of that data to business owners and investors. Okay, so like just bookkeeping is a very simple term and it just helps to organize your financial data. But accounting is used for classifying, then interpreting, then analyzing, and then communicating that information to your future investors or your current investors and owners. Then, bookkeeping typically consists of payroll, invoicing, receipts and bills, and recording business transactions. While accounting typically consists of financial statements and reports, budgets, tax returns, analyzing business performance. So basically, I summarize all of the basic points in this lecture, like the definition, the things that they conclude, for example, so it will be easy for you to understand. Then, the tasks that bookkeepers and accountants do vary between businesses. So, bookkeepers working for smaller businesses might do some basic accounting duties. Theirs often overlap, and the duties may change a lot from one business to another. Okay, then as a comparison, bookkeeping overall you can say it is critical, but accounting is analytical. It needs critical thinking and your analyzation, your creativity, all of them are including in accounting. Then credentials. In bookkeeping, no degree required because it's a simple data that you have to manage, so anyone can manage it. But in accounting, you need at least bachelor's degree. Then objectives. The objectives of bookkeeping is financial, record information, and maintain ledgers. But in accounting, the objective is review financial information and create financial forecast. Then we have responsibilities. The responsibilities of bookkeeper can be data entry, daily transactions, and money monitoring. But in accounting, the responsibilities will be tax planning and preparation and financial statement generation. So, now is the comparison between bookkeeper and accountant. So, a bookkeeper can record and classify financial transaction. He prepares a bank reconciliation and the general ledger, and he tracks income and expense for tax season. While accountant analyzes, interprets, and provides subjective advice based on the data, he assesses the information from the ledger to prepare the financial statements, and he files tax returns. So